it's time to learn some terminology with regard to the financial statements. So we will look at it right now. So in the previous slide, we have discussed the terminology of the accounting equation. We have discussed what's assets, what's capital, and what's equity, and what's liabilities. So now we can divide that assets into another two. One is non-current assets and the other one current assets. Non-current assets means the resources, assets that will be there in the business, that will be used for the business for a period more than 1 year. Assets that will be used in the business for a period more than 1 year. Example, motor vehicles, land and buildings, then furnitures. Those assets, those resources we will be keeping for a period more than 1 year. So that's non-current assets, long-term assets, assets lasting more than 1 year. They can be tangible like physical assets. Examples, can you think of an example? Maybe as I told you, land and buildings, motor vehicles, like those. Or they can be intangible, non-physical assets, like the goodwill of the business. It's an asset, the goodwill. Or royalties the business has, non-current assets. So non-current assets are assets that will be held by the business for a period more than 1 year. So they can be either tangible, which can be touched, like land and buildings, motor vehicles, furnitures, machinery, or it can be intangibles like the goodwill of the business. Then the assets has another part, that's current assets. Current assets are assets, the resources that will be realized within 1 year of the business, within 1 year. Like the amounts that can be collectible from your debtors, from your receivables, that will be realized within 1 year. Assets, we call it current assets. Or the cash in hand in the business, you will realize that cash in hand in 1 year. Or maybe bank balance within 1 year. So current assets are assets realizable within 1 year, like cash in hand, receivables, the debtors, or prepayments done by the business. Now, from the liability side as well, that means amounts that was invested in the business or given to the business by external lenders and debt providers. So liabilities also we can divide into long-term and current liabilities. Long-term liabilities means the dues or amounts that should be paid by the business, amounts or dues that should be paid by the business after a period of 1 year. After a period of 1 year. That means the amounts, as an example, the amount of a bank loan that should be paid by the company after 1 year. Amount of a lease or hire purchase that has to be paid after a period of 1 year. That's long-term liability. In accounting, short-term and long-term divided based on 1 year period. Long-term means a period more than 1 year, and current or short-term means a period within 1 year, less than 1 year. So long-term liability examples are the portion of a long-term loan or hire purchase or a lease that has to be paid in a period more than 1 year. Or current liability. Current liability means the amounts that has to be paid, repayable within 1 year. Examples? Maybe the amounts of a loan, lease or hire purchase, that should be the installments that has to be paid within a period of 1 year. Now every loan which you obtain for let's say 5-6 years, Within 1 year, you have to pay a part. So think of that. That's current liability. Or accrued utility bills. Examples, electricity, water, or telephone bills accrued. They have to be paid in the next month. So that's current liability. So examples are like that. So liabilities, you can divide as long term and current. Liabilities are amounts that has to be paid by the business to external providers of funding. So accounting equation answer that we have developed. So accounting equation we learned is the assets equals capital and liability. That shows the assets of a business is funded by the owners through capital and external lenders through liabilities. So earlier example that I gave you, where owners invest £100,000 in the business. So how does that have the dual impact in the double entry bookkeeping system into the accounting equation? How it happens? So 100,000, by that the cash will go up, assets will go up, and on the other side capital will go up. Double entry bookkeeping, which is done by lookup as usual. Another example I will give you for accounting equation, which is, let's say the business sell on cash, sells something on cash. So what will happen? If you sell on cash, cash will go up, so assets will move up. On the other side, what will happen? Capital will move up because the revenue is something for the owners of the business. So capital will go up and assets will go up. Ultimately, the equation will be equated and it will be balanced. Accounting equation. Another example. An owner has invested his motor vehicle into the business. So assets will go up on the left hand side. Motor vehicle asset, long-term asset will go up. On the right hand side, yes, the equity will go up. Another one. A vehicle was purchased by a lease. Vehicle was purchased to the business by a lease. What will happen? Vehicle, asset, left hand side will go up, asset, and lease is a liability, right hand side will go up. So double entry bookkeeping, accounting equation. Some more examples, some more terminology in the statement of financial position. Income. Income is the revenue, sales, that increases the economic benefits for the accounting period. It's the sales and revenue that is generated by a business. Then the expenditure, which will decrease the economic benefits of the business. Expenditure. Examples: purchases, traveling expenditure, stamp, postage, salary, all are expenses. Expenses will reduce the economic benefits of the business and it will reduce the capital as well. So income example, revenue, sales of the business. Expenditure examples, sales, traveling expenditure, printing cost, postage, things like that. So income less expenditure is the profit of the business. If it is positive, it's a profit. Income less expenditure is negative, which is a loss to the business. So review. Now attempt the accounting classification exercise to ensure that you have understood everything. So we have discussed the definition, how accounting evolved over the period, the accounting equation, different terminologies of accounting, everything we have done. So hopefully you guys will have a proper understanding of introduction to accounting in the managing financial performance will be there. So in the next video we will discuss more on these aspects. So until then, thank you very much.